Hey, welcome back. In this video, I'm going to do a status check on one of my financial goals of 2022. In my 2022 New Year goals video, I have shared that I'll share my actual portfolio value with the actual numbers at the end of this year if I achieve my financial goal. Since we are halfway this year, I thought to share my stock portfolio alone in this video now. And if you're new to my channel, I'm Pranesh and I love to make videos about productivity, personal finance and fitness. Let's get started now. Before showing the stocks, let me throw some insights about my entire portfolio. The stock portfolio which I'm going to share now is just 46% of my total net worth as of today, and the remaining 16% is in my mutual funds, that is also in equity, and the rest 27% is in my PF account, which is in PPF and in EPF, and the rest 11% is invested in golds, REITs and InvITs and cryptos. I use crypto just for the speculation, and that is less than 5% of my entire portfolio, which means the money which I can afford to lose is alone invested in crypto. Let me share the status of my financial goals of 2022. In my 2022 New Year goals video, I said to consider my current corpus value as X, and my goal is to make it to 3x at the end of this year. Currently, I have made it to 2x. With this video, I hope I can achieve my financial goals of 2022 effortlessly, and I'm sure I can share my portfolio value with the actual numbers at the end of this year. Now I'm just going to share the percentage of each stock in my stock portfolio, and obviously the losses I'm sitting on due to the current bear market condition. And a warning before sharing my stocks: when you get a chance to view others' portfolio, don't try to replicate those stocks or copy those stocks in yours, because their percentage of holding will be different and yours will be different. Their entry time, price, value which they got will be different, and when you buy it now it will be entirely different. So it will be of no use when you try to copy them. And the same applies for my portfolio, and I hope you won't do after seeing the color of it. Let's see my stocks. I'll show the screenshot here. Here is my portfolio. You can see everything is in red and only two boxes are in green, and the stocks are Hindustan Unilever, Asian Paints, Jubilant Foodworks, Wipro, HDFC Bank, Tech Mahindra, Tata Steel, Axis Bank, Hero MotoCorp, HL Technologies, ICICI Bank, Dabur, Adani Wilbur, Tata Motor, DVR, Infosys, ITC, Pidilite, Kotak Bank, Marico, TCS, Kalyan Jewellers, Zydus Lifesciences, that is Kerala Healthcare, Nazara Technologies and Manappuram Finance. Now let me share the status of this stock portfolio alone. If you can see, I am sitting in a loss of minus 8.9%. That means from the investor amount, my portfolio is fallen 8.9% down. You can say I have lost, but I am not. My stock portfolio motto is to beat Nifty in the long run, and also its drawdown should be lesser than the Nifty. Drawdown means when the Nifty falls by 10% down, my portfolio fall should be lesser than 10%, and in the end of the year, if the Nifty index return is 13% per annum, my portfolio return should be greater than 13%. Hope I make sense. As of now making this video, Nifty has fallen 16.7% from its 52-week high. So Nifty is minus 16.7% and my portfolio is minus 8.9%. From this I can say my portfolio is performing well than Nifty index, and I'm not lost, I'm on track. With this said, let's move on to the strategy which I'm following for my stock portfolio. If the entire market is falling, my stock portfolio is also going to fall. I have no control over it, but I can minimize the loss which I'm going to face by choosing the stocks which are low volatility, which means there will be not much fluctuation in the stocks. When compared to other stocks, there will be less fluctuation. My stock picking strategy is simpler. It should be in Nifty 100. The stock which I'm going to choose should be in Nifty 100, and it should be in low volatility, and it should have low or zero debts. That's it. It's a no-brainer. Anyone can do it. There will be exclusion on one or two stocks like Tata Motors, and mostly all of them are low volatility stocks, and it's in Nifty 100. Why I chose Nifty 100 instead of other index? We are all normal people and we are not high net worth individuals or anchor investors. We don't have access to information for a mid and small cap companies as HNI and anchor investors gets. So I chose low volatility stocks within Nifty 100, and the stocks in Nifty 100 are called large cap stocks, which are bluest of blue chips. And if you want to be more on a safe side, choose stocks within Nifty 50 instead of Nifty 100. In simple, just know what the heck you are buying instead of buying a company without knowing what they are doing and where they are. You may have a question for me that, have I stopped my investment as the market is going down since October 2021? The answer is no. I haven't stopped investing. I'm investing as usual. The companies which I chose are debt free and they are part of Nifty 100, and the chances of these companies to default are very less. Then why do I have to worry about the short-term market swings and not to invest? When the fundamentals of my companies are good, then why I must fear? I have another reason why we should not stop investing. Some people will be in thought of doing bottom fishing. That means they are waiting for the market to hit its bottom and then they will start to buying stocks. Please don't do that. Nobody can predict the bottom of a market, and you are not here for that. You are here to make money by investing. So keep your investment going as usual and don't do bottom fishing. And this one is for the people whose portfolios are in red. Just look at the screenshot here. If you look at the Sensex returns for the last 15 years, that means you have stayed invested for 15 years irrespective of market condition. There were no negative returns in it. If you are a long-term investor, then you no need to worry about your portfolio now, whether it is a positive or negative. Keep investing as usual every month, irrespective of market sentiments, and I'm sure that one day your portfolio will be a skyscraper. I mean, no one can believe your portfolio value. I want to end this video with two advice. One is from the book Psychology of Money. Our short-term failure in our investments should not affect our financial situations. That means you should not be dependent on your invested amount. Even if your portfolio falls by 50%, it should not affect you or your day-to-day finance in life. Play safely by investing an amount which you can afford to lose. Don't take the word lose literally. It means the money which you don't need for the next 5 years. And in this way, you can be running for a long time until the odds are coming into your favor. For example, a bull market. I have another advice to you when your portfolio is in trade. That is, just think, this too shall pass. Keep this in mind and invest regardless of market fluctuation so you can harvest your fruit when it is ripened. And keep in mind that this too shall pass will applicable for you when your portfolio is in green. At that time, don't be too greedy without booking profits. And that's how we came to end of this video. And I want to end this video with one of the Warren Buffett's quote. That is, we don't have to be smarter than the rest. We have to be more disciplined than the rest. Nobody can predict the market, not even Warren Buffett. That's the beauty of it, and that's the greatest advantage you have here. Use it wisely by investing in it, whatever happens. Stay invested. Signing off, Pranesh. And subscribe for more videos like this in future, and like this video if you find it useful and share to any of your friends. Bye. Take care.